Hi, I'm Ben Littman, founding member and chief investment officer of Pure Financial Advisors. Back when we started in 2007, we always knew that we wanted to do it differently. The landscape of the industry was very different back then. There were a lot of commission-based products. There were investments that wrapped up your money for a long period of time, and we wanted none of that. We wanted to be transparent, liquid, and academically influenced. Pure's investment philosophy is founded on two fundamental principles: the power of capital markets and decades of Nobel Prize-winning research. Today we're going to go over 7 pillars of our investment philosophy. First, we take a look at our research-driven approach. From institutions like Columbia to the University of Chicago, Nobel laureates, we hail upon decades of research to inform our portfolio construction process and our investment decisions for our clients. Second, we attempt to harness the power of capital markets. What I mean by that is if we take a look at the market as a whole, we've got stocks that are trading efficiently and freely, we have the population growing consistently, and we have society innovating and creating technological advancements. All of that together is why the market produces a return that is greater than cash, and we want you to participate in that. Investing over speculating. This is a big one for me because you'll have your friends, they heard on talking heads on the financial media. The reality of the matter is a lot of times those are what we call glamour stocks. They're trading way above their fundamentals, and the only thing that might provide you a return in the future is what's called speculation. What we feel for your retirement portfolio, what we want to target is studies and research that show that certain segments of the market tend to do better over time than others, and large baskets of securities to invest in as opposed to that one stock you heard on the news. The next pillar, avoiding timing the market. All the research has shown that it's very difficult to do, very difficult to time the market. You have to know when to get in and you have to know when to get out, which means you have to be right twice. We think it makes a little bit more sense to sit down with a financial planner, come up with a plan and a rate of return needed to achieve your retirement goals, and then invest right away and stay disciplined and stay invested. We've come to the next pillar, which is creating a well-structured portfolio. Being a portfolio manager is a huge passion of mine, and so I'm big on this one. What we try to do is create a diversified portfolio so all your eggs aren't in one basket that contains stocks, bonds, domestic, international, corporate and government securities. We're looking at factors, dimensions, or trends in stocks that have proven to be successful over the years, like small companies tend to perform better than large, lower price securities tend to have a higher return potential than higher price securities, short-term bonds to offset the volatility in the equities. All these concepts we're trying to bring together to create your well-structured portfolio. Tax-efficient trading is where the rubber meets the road. Now we're talking about implementation. After we've created, designed, and shown you the portfolio, well, this is when our traders and portfolio managers are monitoring on a daily basis opportunities for things like tax loss harvesting in your portfolio. Tax loss harvesting is where we're able to take a loss in let's say small cap stocks are down, we're able to sell that position, maybe an ETF in your portfolio, and buy something similar so you're not out of the market, but you're able to take the loss. What that loss will do for you is offset up to $3,000 of ordinary income on your tax return, potentially also create loss carry forwards, and also maybe even create a pool of tax-free income in retirement. Which brings us to our final pillar of asset location. You might think that once we create your well-structured portfolio, we're putting that portfolio in each of your accounts, your Roth, your IRA, your trust. But we're able to take it a step beyond that. We take the portfolio that might contain 14 different asset classes, and we're able to spread those across your Roth, your IRA, and your trust. We like to refer to this concept as the tax triangle. Maybe we're putting the higher expected return assets in the tax-free environment in your Roth, the bonds in your IRA, which might not grow as fast as the stocks, but it's in the highest ordinary income tax rate environment, and then the tax-efficient assets in the trust. At Pure, we're fiduciaries, which means that legally we have to act in your best interest at all times. We don't sell product, we do detailed financial planning, and then we hope to implement that financial plan through our investment management and our constant monitoring. Your advisor kind of acts as the quarterback, but they're only one piece of the puzzle. We have a whole financial planning team / department that's coming up with recommendations, reviewing them with your advisor, creating what we want to implement. Then it gets passed along to the trading and investment management department, which is responsible for the daily monitoring and implementing of the portfolio and implementing of much of the tax strategy. You have the ability to log in through your client portal and view any of these things at any time. So that was only a brief overview of Pure's investment philosophy. If you'd like to sit down with a certified financial planner for a free assessment to look at your portfolio, click on the link below.